Hi, everyone. Welcome. So, we just got in today to Belize. One of the islands here is called Ambergris Key. The town is called San Pedro. So, I first started coming here back in 2015 and fell in love with the island. There wasn't really a whole lot going on yet, really laid back and still behind on the times. Even now, a lot more construction has come on these past 8 years. But today's topic, I want to talk a little bit about diversified investments. And so, investing is something when we first started off, we were doing the traditional investing, the 401k, IRAs, kind of the traditional stocks and bonds, mutual funds. And when we started learning a little bit more about real estate investing, we bought this home. Actually, we built this home. So at the time, we came back and forth to Belize to learn a little bit about the market. And so I came here actually on a girls' trip, fell in love with the island, called Jaime that evening. Hi, Jackson, how are you? I called Jaime and I said, we are buying something here in Belize. And he was like, whoa, 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 don't buy anything yet. And so, I saw the potential, of what could really uh, be of this place. And so we went back and forth, met with the brokers, did a couple of real estate field trips out to Belize to kind of see if this is something that, we would want to invest in. And so from Dallas, there's American Airlines that flies direct over to Belize City, and that's the mainland. And then you can get to the island either with a small plane. It's like a 12 to 14 seater. And there's two local companies. One is called Tropic Air and one is called Maya Air. Or you can take a water taxi. The flight's only 15 minutes to go to the island. If you take the water taxi, definitely takes a little bit longer, but it's definitely less expensive. But either way, it's a really short 2.5, almost 2 hours and 40 minutes from Dallas to Belize City, and then another 15 minutes from Belize City over to the island. And so at that time, we decided to buy a lot of land, and we bought the lot of land for $135,000. And we hired an architect and really custom built out the home. And so the goal of the home was to be a legacy asset so that we could vacation back and forth, as for family, for our teams. But then also when we're not here, we would Airbnb it out. And so the location of it is really unique. And so we're on First Street. And so it's right next to a resort called Mahogany Bay Village. But this street is not owned by Mahogany Bay Village. So we were the very first ones to buy the land and build on it. And now a lot more people have started building their home on this. But at that time, nobody was really building on this street. We were the first one. And, they originally told us it would take about 6 to 8 months for construction. It's island time, so that definitely was almost more than double the time. But nonetheless, we absolutely love the home. And in proximity to, it's about a 10-minute golf cart ride to the core of where all the restaurants and the businesses are. Right next door is Mahogany Bay Village, which is a beautiful hotel, but it's not your typical hotel. They're all like white little homes, kind of like suites, or you can rent out the whole house or you can rent individual rooms. And they're almost just like British colonial white style, and everything inside is mahogany bay wood. And so we custom built everything the same way, kind of a similar style to the resort, so that everything within this area in the village is all white and Mahogany Bay Village. I mean, it's in mahogany wood. Everything is custom built with mahogany wood. But we have a management company that watches everything. They concierge pretty much all our guests. They do the booking. They get the housekeeping, anything that needs fixing. They do the daily maintenance, and so they kind of do the day-to-day operations, keep us in the loop. And so for us, It's relatively hands off, except for, of course, when things need to be replaced. But we personally still like to come down, number one, to vacation. But number two, you always want to have a pulse over your investment properties and over the management companies as well. But I think that's been a really good. So this is just one bucket of investment. Obviously, we did this the hard way. Building something from ground up construction takes time, especially in a foreign country, getting the city permits and getting everything properly done. And especially if you're renting out Airbnb, kind of like a hotel, then you're going to want to get the proper legal documents. And but the management company, that's what they do. We give them a 20%. It's an 80-20 split. They take 20%. And they do all the work. And so for us, it works out really well. And then we use the home whenever we like. We just give them heads notice so they block out the dates for us. So that's one bucket of investments. I always tell people, diversify your investment strategy. And some of them are long term. This one, when we built it from ground up and because of the financing, leveraging debt is a huge component when you want to consider investment opportunities. So if you're going to be an active doing your own deal, in the US, even the interest rates increasing, we talk about because we've been spoiled by these super low interest rates of 3 to 4%. Now going to 6 to 8% sounds ridiculously high, but honestly, that's the lower. The average has always been around 5, 6, 7, right? But in Belize at the time, when we looked into financing the land and building out the construction, the banks here wanted 13%, and that was just way ridiculous. And so honestly, we paid cash for everything, and that tied up a lot of our equity. But we did that. But in hindsight, I mean, that was 8 years ago. Now most of our investments we leverage, and it's good debt. And so when we buy the other type of asset classes we buy in, the bulk of what we buy and what we specialize in are multifamily syndications, apartment communities. And so we buy existing AB properties that are stabilized in Sunbelt markets. And Sunbelt markets, we're looking for things that are more landlord friendly, prime areas of growth. And so we're looking for employment growth, diversification of employment. We're looking for job growth. We're looking for good household incomes, low crime areas. And so we're not buying more distressed type properties. And that's kind of our business model, is to buy still a light value add where we can still buy at a discounted price, go in and renovate and improve things for the residents, whether it's interior or exterior renovations. But a syndication model, so instead of like this type of property, we didn't have any partners. We purchased this solely by ourselves. But this we consider a legacy asset. We're going to carry this on. I mean, this is named after our daughter, so we named it Athena's Mahogany House by the Bay. This is a long-term strategy hold for personal use of lifestyle, but then also for Airbnb. Our multifamily is a shorter exit strategy, is usually about a 3 to 5 year hold. And we have partners. We have other general partners, and we have limited partners who are solely passive investors. And so depending on if you wanted to go and invest in a syndication, that means everybody can pool money together, and you can start off with either a $25,000 or $50,000 minimum on most of these. And most of these projects, you don't have to be accredited. And so it allows an opportunity for someone who may not have the best credit score, who may not have experience in the real estate avenue, but they want to have ownership in real estate, but they don't want to do all the work. And so that's a really good area. If someone wanted to be a passive investor, they can truly be a passive investor and have their money grow and leverage someone else to do the work. Or you can be an active partner, which definitely is a harder thing to do, but definitely possible. And so it kind of depends on how much time, what your skill sets, how much money, what your resume looks like. And so there are different ways of getting into that. And you can syndicate anything, because syndicating means that, hi, Martine, how are you? But you can syndicate land. We did our land development project. And again, we're looking for prime markets. And we bought a 21-acre lot of land in Salina, Texas, which is about 20 minutes north of a suburb here in DFW. And so it's one of the fastest growing areas. And so land development is a different strategy. So land development, again, there's two phases, but you're not looking at cash flow when you're dealing with land development. And land development, because there's no historical data, it's not like multifamily that's established and you have numbers and rents to do a pro forma. So you really have to kind of know the market and surrounding, who's coming, what's the growth projections, are there any other retail areas or multifamily already existing there, so that you can do a comp and base it off of that. But new development has a higher upside upon sale, a higher possibility of upsell, depending on if you're buying at a low cost. And so just for an example, so let's just say multifamily, just let's put some generic numbers. Obviously, it's going to depend and change depending on markets, but on average, an investor would get, within a 3 to 5 year hold with multifamily, you would get an average annualized return between 17 to 20% average, right? After you sell the property. The cash on cash, it depends on how the property is doing. The cash on newer assets are going to be a little bit lower, maybe 3 to 6% cash on cash. And then when you sell the property, that's where you get most of the profit margin. Now, because interest rates have been increasing a lot, depending on the type of debt structure that was put on there, a lot of multifamily projects have been impacted with the cash flow. So the cash flow might be a little bit lower, but the backside when we sell the property is going to be pretty close to what we projected. Fortunately, multifamily is a space where if you're in the right market, even through tough times, it's a very resilient asset class. Airbnb struggled when we were during COVID. So obviously our Airbnb, Belize, the whole country closed down for 9 months. And so even though we were booked, hi Messina, how are you? Even though we were booked, we had to cancel everything because you cannot go in and out of a country. So Airbnb struggled. Our hotel, we invested in a hotel here in Belize, actually Mahogany Bay, which is right next to us. We did invest in that as well. In 11 units. And then but again, money stopped during COVID from our Airbnb, money stopped from our hotel. With multifamily, because we're so diversified, currently we have 20 something multifamily, predominantly Texas based. So Houston, San Antonio, DFW, Amarillo. We have some in South Carolina. We sold that one in South Carolina, Phoenix, but the bulk of it is in Texas, Houston and DFW predominantly. But again, cash flow, appreciation, depreciation, and tax advantages. The good thing about Belize is there's no capital gains tax. So that's one really nice. Property taxes, super cheap. We pay about $200 a year for property taxes. And so we currently have 3 lots of land in Belize, 1 Airbnb, and part of the hotel. And so, but again, that is solely us, so we don't have any partners. And when you take a lot of equity of your own money and you invest something like that, it is higher risk because you don't diversify. But if you have enough cash where you can divvy it up and say, maybe do some in multifamily, if you wanted to do Airbnb. But again, Airbnb is tricky. Dallas County, again, just announced that they stopped Airbnb in Dallas County and a lot of the areas around DFW, Arlington, Fort Worth. They're pushing to stop Airbnb too. So again, a little tricky with Airbnb. Some people, the loophole to get around a short-term rental, they're doing midterm rentals, where instead of under 30 days, they're doing above 30 days. So it still doesn't, it's not considered short-term rental. So I know some people are doing that in Austin when they stop short-term rental. They're doing it above 30 days and they're renting it to, say, traveling nurses or corporate, and they're doing really well with that as well. So there's a lot of different ways you can invest. Land is really just phase 1. You buy raw land, you do the entitlement process, the underground work, you work with the city, you get everything approved, you do the underground work, and then you sell off. Like we bought 21 acres of land in Salina. The project is 10.5 acres. We will keep that possibly. If we keep it for phase 2, we would build 330 units of multifamily. The other 10.5 acres, we parcel that off and sell it for commercial retail. And so mixed use retail with multifamily, which is very, very popular to have people live, eat, shop. And so those new complexes are really good. And so we closed on that land about 3 months ago. We bought it for $9.2 million. We had three other partners that we split evenly out. And what we did was, we had investors come in three different classes. And that one was our first land development project that's mixed use and new construction for multifamily. So the minimum at that one was 200,000. But already 3 months in, we already have several people that are sending us LOIs significantly higher than what we had already projected for our pro forma. Taylor was an area that we were looking at too, right by the Samsung plant. And so you're always kind of looking at things that are like, what's growing in that area. And that's what you want to be is, yes, you can get things for cheap, but if it's not in an emerging market where you don't see a growth in employment or people moving there, then yes, it's cheap, but as an investment, when you kind of do your due diligence, you have to look at what your projections are, especially if you have investors. And I think the key is partnering with someone who has experience. And so when we did the multifamily new land development project, our specialty is in multifamily existing. And so we partnered with someone who was in the business for over 25 years. And that's his specialty, was land development, construction. He'd already had multiple projects in the area. He already worked with the city in Salina. He has another project in Salina. And so mitigating risk is my number one thing. How do I mitigate the risk, not just for myself, but more importantly, for my investors? Because if it doesn't pass the due diligence, or if we feel, especially when markets are tricky during COVID or during times now where interest rates are high, but honestly, during these times when people are scared and everyone's sitting on the sideline is actually the best times. We had some of the best deals during COVID when institution players were sitting on the sideline and we were able to get properties at a 20% discount. It's happening again now. People who have to sell because of their bridge debts coming up, or they just don't have enough money, or they weren't capitalized well enough, they're running out of cash flow, or they're forced to foreclose or have to sell it, but they're still very good assets. They're coming on a lot. And so usually when people are scared, that's the best time to be prepared. And so, yes, everyone gets impacted during this time. I mean, us right now too, some of our projects are being impacted with our cash flow. So a couple of our projects we can't distribute yet because of the raise. It went from 3.12% to what? They're like 7% now. So even though we purchased an interest rate cap, and thank God we did, or else we'd be in serious trouble, but still, that takes up a lot of your cash flow while you're still renovating and bringing up the rents and doing the things to the property, And so you have to be patient. Real estate investing is not a get rich quick by any means. But, there's a saying that, buy real estate. Don't wait to buy real estate. Buy real estate and wait. And so I'm very bullish on, buying real estate. We're being extra conservative. We've turned down about 6 different projects this year alone, just because of the increase in everything that's happened. And so we source deals very, very carefully. And so by the time that we present a deal to investors, it's gone through a lot of sourcing from our team. We're loan guarantors on most of our projects, and every project that we present to our investors, we personally invest our own money. So we never present a deal to an investor unless we are actually part of the project ourselves. And if it's in a market that we're not in, we're leveraging boots on the ground partners, and that's super important. If you're investing somewhere, you don't have to invest in the market you live. But if you're investing with someone, you want to make sure that the team who's responsible for running the operations and overlooking the management company, that someone on the team is hands-on with the property, that is local boots to the ground, that is well versed in that market, that specific sub-market. Just like Dallas, Houston has very small submarkets that one area could be extremely good and one project can be extremely bad, just a few minutes apart. And so knowing the ins and outs of the demographics that are living there, the type of employment that's there, and so you want to be well versed in that. Um, the other type of international investments we do, Belize is one, and then the other international we did invest in Nicaragua and Panama, and we do teak investments. So we buy land and they grow teak. But again, that's a long-term strategy. That's not something we syndicate. That's something we did just by ourselves. It was a low entry point, and so we decided to give that a try. Nothing cash flowing, and that's usually a 7 to 10 year exit strategy. Um, Diversified, I mean, there are so many different investments, I will tell you, but I would just say get started. The biggest question I get is, well, I don't have that kind of money. Like with syndications, you're talking about 25 or 50,000, sometimes $75,000 minimum. How can I get started in the world of investing? I don't have that kind of capital, right? And so there's different ways. Some people don't realize that you can actually have self-directed IRAs from your retirement funds to invest into assets. You can also, join others. Like if you have family members who want to put in an X amount, say the investment is 25 or 50,000 minimum. I've had some people partner together with a couple of other family members, create an LLC so they can invest together in a syndication as passive investors. You can also, of course, when you're starting off, if you want to do a diversified mutual fund or IRAs, you want to just start investing. That's the key, is start investing. Because if you make money, if we just go back to the basics of making money, most of us, we get a paycheck and we start spending, right? And then if we have anything left over, then we might invest. And so I challenge everyone to start investing as early and put an X amount, make a commitment, and you have to budget, 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 budget. And I share this all the time, how we sacrificed and we lived at the very beginning because we were we wanted to invest. And so we made that a priority. And so even though we didn't make much money at the beginning, or we didn't have much and we still have a lot of debt, we have to budget. And you don't realize how much you spend. You're right, Sabrina. It is never too late to start. Messina, yes, start investing. You have to start, and you have to put an X amount in. Yes, have your emergency fund, budget out what you're, live way below your means. And I think most people live above their means, or they just have lifestyle inflation. The more you make, the more you spend. And so, but money compounds. The power of the younger you are that you can start learning about diversified investment opportunities, then you plant the seeds so that when you do start making more money, or you try to create other job opportunities or side gigs or work extra, so that investment money you don't touch. That money just keeps compounding and growing. And I always say, don't put all your eggs in one basket. Learn to diversify. Find someone who specializes in the area of investment that you can trust. What do I think about IULs? I am not an IUL expert. I have some. I'm very diversified. I have index universal. I have variable universal life insurance policies. And again, different people that I've talked to. So I have all of those buckets. I've not borrowed against it, because one of the things that they say about the IULs, index universal life policies, is it's kind of like where it's building interest upon that, right? But it's also a life insurance policy. It's a whole life insurance policy. I am not the one that specializes in it. Do I have them? Yes. I'm probably in every bucket that you can think of, a little bit. What I know in, what I specialize in, I put the bulk of my investment. 90% of my investment is in hard tangible assets in real estate. Everything else is kind of divvied up. So am I in crypto? Yes, a little bit. Am I in NFTs? A little bit. Like everything, I'm in a little bit, right? Just enough, but it's not my forte. So diversify. But the bulk of investment, you should heavily invest in what you understand and what you know. Because if you're giving someone money and you don't really understand it, that it gets tricky, right? So you definitely want to learn, and trust is a huge part of it, right? And so that's one of the things that, investments are always a risk. It doesn't matter what kind of investment it is, and sometimes it's not going to go exactly the way it's planned because there's unforeseen things, like no one expected the interest rates to go up that fast, and so it impacts everybody across whatever asset class you're in. But one of the biggest thing is underwriting conservatively, so you have enough cash on hand, that you're running operations tightly, that you tell investors what's going on and give them monthly reports and updates. And so communication and transparency is very important. But that's it. There's no magic ball to be like, well, what's the best investment or anything like that. You have to kind of depend on where you are in your life cycle. What's your risk tolerance? Because higher reward usually means there's a little bit of a higher risk profile too. And so you have to kind of see, is this something how has the risk been mitigated? What's worst case scenario, type of thing. And so shiny objects are always going to come up, but there's a lot of different ways to build wealth, a lot of different things you can invest in. And so continue to learn about different investment classes, know the pros and the cons, but be patient. Be patient and learn. Be patient as far as you know learning, but don't wait too long. It's like analysis paralysis. Put your money to work for you. If your money is sitting in the bank, you're probably not getting a lot of interest on that. And with inflation, if your money's not doing much for you, you're actually losing money. And so, prioritize, and we downsized. We were living in a fancy big home, and what we called our dream home. But the reality of it was, it was a big pivotal point for us where, we sold our home, but and it fit our lifestyle. We moved into a high rise for about 4.5 years, and we utilized that money to just put it into assets. And we grew our assets the past 4.5 years tremendously, by having capital on hand. Because if an opportunity comes and you aren't prepared to have the money to invest, that's a lost opportunity. So you have to consider the cost of lost opportunity. So be prepared, get educated, surround yourself with people who are doing the things, that you want to learn more about. And so I'm always still constantly learning, growing myself. And, but I love just having diversification. And, one of these is my lifestyle investing. But believe, if anybody's ever interested in coming to visit, or if anybody wants to come and stay in Ambergris Key, the island's called San Pedro, if you're interested in our home or whatnot, let us know. We'll share whatever insights we have, places to eat, things to do, good companies that you can work with as far as excursions or tour trips or anything like that. But there are lots of ways to build your wealth. Start investing. Okay, so that's it for today. We're about to go back into town. Oh, it's just starting Lobster Fest here in Belize. And so this Sunday, we're going to do lobster spearing, which is probably the funnest thing. We go to a lot of beach destinations, but the waters, I think snorkeling, the coral reefs here, second largest coral reef here, the most beautiful coral reefs and clear waters when you go snorkeling here. People go here to, what is it called? Fly fishing and diving. But we normally go snorkeling. We'll do lobster spearing. Right now it's not conch season, so we can't go conch, but we can catch fish. And then they'll bring us to a private island and we'll grill everything up. So it's a live catch, the freshest way to eat seafood right out of the water. They'll bring the side items and everything. And then we'll go to another smaller island called Key Cocker, and then we'll go swim and walk the island and shop and things like that there. And so we can customize the trip, but it's one of our favorite things to do. And July is usually the beginning of lobster season, and they have a whole week of celebrations here on the island called Lobster Fest. And so we're about to head out one of the restaurants where they're featuring a lot of the events. But thanks for joining, everyone, and I'll be sharing a little bit more And we'll see what the next topic is. I'm going to be switching around as I come on live. I'll be switching around different topics. And drop me some messages down here on my next one. What are some other things? What are some other topics you would like for me to discuss? So, write in the comments what you would like to hear from me, whether it's investments, whether it's mindset, whether it's speaking, whether it's building the courage to break out of your comfort zones, family questions, relationships. I've been with Jaime for 18 years. He's also my business partner. So health, that's another, I've been on a big health journey for myself. And so lots of different, I always talk about the spokes of the wheel. And so we'll touch on different spokes of the wheel because at the end of the day, inner happiness, and it's about all areas of our life, not just work, not just play, but a combination and the balance of being able to enjoy and create the life that you, not going on autopilot. You want to live fully. And so, do you mentor? I've been asked this a lot. That is something I am contemplating and thinking of. I mentor a lot, just one-on-one and a couple of group coaching. Nothing that I charge for, just something I do, but obviously with my time and my schedule. But I am thinking of creating something, maybe more of a group mentoring for everyone. But that's maybe in the works. We'll discuss that a little bit more, hopefully within the next month or two, if that's something that I can definitely commit to, because I want to be able to help so many more people and be able to mentor people on a larger scale. One-to-one mentoring is a little bit tougher, but we'll see. All right. Thank you, everyone. Bye.